Good morning everyone. Welcome to my YouTube channel Learn CMA with Pavithra. In the previous videos we have seen the format of trading account, profit and loss account and the balance sheet. Today let's start solving the problems one by one. Before solving the problem, let's read the problem which is given in the material provided by Institute. Following are the ledger balances presented by Messrs. P. Sen as on 31st March 2013. Stock 1/4/2012 10,000, purchase 1,60,000, carriage inwards 10,000, wages 30,000, freight 8,000, sales 3 lakh, return inward 16,000, return outward 10,000, royalty on production 6,000, gas and fuel 2,000. Here we can notice that they have given two different dates, that is 31st March 2013 and 1/4/2012. As we all know, every financial year starts from 1st of April and it will end on 31st of March. So here 1/4/2012 which is given here, it is opening stock. And also we can see here return inward and return outward. Many students will be confused that which is purchase return and which is sales return. Let's understand that. Goods which we purchased on credit, if it returns back, it is called as return outward. Goods which we have sold and returned by the customer is called as return inward. In simple, I can say that goods are coming inside the business, that is called as return inward. Goods are going outside the business, that is called as return outward. There are certain reasons for purchase return and sales return. Some of them are wrong product, wrong size, defective product, it might have arrived too late, product did not match the description, might find a better price somewhere else, etc. Okay, now let's move on to the additional information they have given. First one, stock on 31st/3/2013, market price 24,000, cost price 20,000. As I said before, 31st/3/2000 is the end date of financial year. Okay, so this is closing stock. And also we can see here they have given two different amount. One is market price, another one is cost price. The closing stock will be valued market price or cost price, whichever is less. Here cost price, that is 20,000, is the least amount. This amount we are going to consider while solving the problem. Second one, stock valued rupees 10,000 were destroyed by fire and insurance company admitted the claim to the extent of rupees 6,000. Stock value 10,000 were destroyed by fire. This is the abnormal loss. Now we should understand what is the meaning of abnormal loss. Some losses are accidental or can be caused by carelessness. That is called as abnormal loss. Examples we can see by theft. Goods lost by theft, lost by fire, flood, earthquake, war, accidents while transportation, etc. These are the different examples for abnormal loss. In the problem, they have said that stock of rupees 10,000 were destroyed by fire. This amount should be added to the closing stock in trading account. And we can also see the amount which is provided by the insurance company of rupees 6,000. This we are not going to consider while preparing the trading account. Next, third one, goods purchased for rupees 6,000 on 29th March 2013 but still lying in transit, not at all recorded in the books. Here we have purchased the goods worth of rupees 6,000 but we have not written in the books. This we should add to the purchases as well as closing stock. Next, fourth one, goods taken for the proprietor for his own use for 3,000. This will be called as drawings. What is the meaning of drawings now? When the proprietor withdraws money or goods from the business for his personal use, it is considered or it is called as drawings. Here, it is clearly said that the proprietor has taken the goods for his personal use. So, this should be deducted from purchases while preparing the trading account. And the fifth one, outstanding wages amounted to rupees 4,000. This is outstanding expenses. What is the meaning of outstanding expenses? The expenses which is due but has not been paid, that is called as outstanding expenses. Here the company has taken the benefit but the related amount or the payment has not been made. Okay, so this outstanding expenses should be added to the respective expenses. Next, sixth one, freight was paid in advance for rupees 1,000. This is prepaid expenses. They have said that paid in advance. So this is prepaid expenses. Meaning of prepaid expenses? That is future expenses that are paid in advance. So prepaid expenses should be deducted from the respective expenses as we have already paid. So now let's start solving the problem. Here heading and the format is also really important. In the books of Mr. Seth, trading account for the year ended 31st March 2013. On the left hand side we have to write debit. On the right hand side we have to write credit. We have to start with opening stock. Amount is 10,000. Next, to purchases. I am using the inner column for the calculation purpose. The purchases amount is 1,60,000. For the purchases, we have to do certain adjustment. One is we have to less or deduct return outward or purchase return. Okay, the amount is 10,000. Next, and also another adjustment, goods taken by the proprietor, that also we have to deduct from purchases. The amount is 3,000. Next, one more adjustment is there, that we have to add to the purchases, add goods in transit, that is 6,000. The final amount is, after deduction, and after adding 6,000, the amount is 1,53,000. You can see certain direct expenses they have given in the problem. One more thing which we need to remember is, whenever we are preparing the trading account, we have to consider only direct expenses and we have to ignore indirect expenses. So let's see the expenses whatever they have given. To wages, amount rupees 30,000. They have given adjustment for wages, that is outstanding wages. Outstanding expenses should be added to the respective expenses. The amount is 4,000. So the total amount is 34,000. Next, expenses carriage inwards. The amount is 10,000. I am writing it here in the outer column because there is no adjustment for carriage inwards. Next, freight. Freight, there is a adjustment, right? So writing it in the inner column is the amount, and let's see the adjustment. Prepaid freight they have given, so that we should be deducted. The amount is 1,000. So total is 7,000. Next, to royalty on production. No adjustment, writing in the outer column. Amount is 6,000. Next, gas and fuel. Amount is 2,000. No adjustment for this. So this is the expenses whatever they had given. Debit side we have completed. Let's go to credit side. Sales. Amount is rupees 3 lakhs, and also there is an adjustment for that. We have to deduct sales return, that is return inward. Amount rupees 16,000. Next, buy closing stock 20,000. There is adjustment, so I am writing in the inner column. We have to add stock destroyed by fire. The amount is rupees 10,000. Adjustment is there. Add goods in transit, that is 6,000. So here also we have not written the final amount. Let's write 2,84,000. Next, here the final amount will be 20,000 plus 10,000 plus 6,000, that is 36,000. Now we should see both the side amount total. We should see what is the amount. Here we can see credit side the amount is higher, that is 3,20,000. So both the side we have to write 3,20,000. Total amount is 3,20,000. And from this 3,20,000 we have to deduct all this amount. Okay, a different amount is 98,000. So here to profit and loss account. Profit and loss account, in bracket we have to write gross profit transferred. So here we can see income is more than the expenses, then it is profit for the business. When the expenses are more than the income, that is loss for the business. This is very simple problem they have given in the beginning to prepare trading account. Hope you have understood well. If you like the video, please like, share and subscribe for the channel. If you have doubt or queries, you can write it in the comment. I will reply. Thank you for watching my video. Thank you.